Euro dollar. So the market has been very well bid over the past several sessions, though with the broader trend intact, we have seen some resistance in the 1215 area, which happens to also be the 61.8% fib retracement off of the May high to July low move. At this point, a break above 1215 would be required to open the door for additional corrective action, which could take gains up towards the 1325 area in the form of the 78.6 fib retracement off of that key May high to July low move. However, inability to break above 1215 will keep the immediate pressure on the downside and open the door for a retest of that critical base that we saw going back to the 20th of July at 108.10. Sterling dollar. So cable has been locked within a consolidation over the past several sessions, though the overall outlook continues to be quite constructive here, with a potential higher low now in place at 53.50. Look for a break above recent highs at 56.90 to strengthen this outlook and open the door for a retest of that critical 2015 peak on the 18th of June at 159.30 further up. Dollar yen. So dollar yen has been very constructive with the market locked within a well-defined uptrend, though there are signs of the market wanting to top out after stalling yet again above 125 and ahead of that critical June 25.85 multi-year high. At this point, look for a break back below recent lows that we saw in the 123 area to confirm a potential topping and open the door for a deeper acceleration and deeper correction down towards that key low that we saw back on the 8th of July at 121.30. Euro Swiss. So Euro Swiss is stalling out a little bit after market traded up above 109, just shy of 110, and the market is now looking to pull back for a correction with overbought studies warning of such a correction, potentially back to previous resistance now turned support at 106.90. However, ever since breaking above multi-day range resistance at 105.75, the structure is now constructive and a higher low is sought out somewhere in the 106.90 area or ahead of 106.90 in favor of the next upside extension back above that critical psychological resistance at 110. Aussie dollar. So Aussie has been locked within a consolidation over the past several sessions, though we did make a quick fresh 6-year low at 72.15 last week. At this point, look for a break below 72.15 or a daily close below 72.15 to open the door for an acceleration and a bearish continuation down towards psychological barriers at 70, while inability to do so immediately, followed by a break back above 74.40, would open a more significant correction in this market, potentially back towards the 77 area from where the next lower top is sought out. Dollar CAD. So dollar CAD recently put in a fresh 11-year high at 32.15, and the market has been in the process of correcting. Setbacks could extend down below recent support at 128.60, which would then open the door for a move potentially into the 126s. But ultimately, the structure remains highly constructive, and any setbacks are viewed as corrective in favor of that next medium-term higher low and bullish resumption above 132.15. Kiwi dollar. So Kiwi has been locked within a consolidation over the past several sessions. We did make a fresh multi-year low at 64.70 last week, but the market hasn't been able to extend gains materially below 65. And until we see a daily close below 64.70, there's risk for additional consolidation and maybe even a potential correction. A correction would be confirmed on a break above 67.40, which could open the door for a move up towards the 70 area, from where a meaningful medium-term lower top would be sought out in favor of a bearish resumption below 64.70 and towards psychological barriers at 60 further down. SPX 500. So the S&P 500 continues to chop around, but is showing signs of a material top after putting in a record high in May at 2137. But the market would now need to break below critical and elusive support at 2040, that March low, to confirm the topping outlook and accelerate declines. Gold. So gold has done a good job recovering in recent trade, though the market hasn't been able to establish back above the previous 2015 base at 1142. While the market holds below this level, the downtrend remains firmly intact, and a lower top is sought out in favor of the next downside extension below 1073 and towards that major psychological barrier at 1000 further down. A break back above 1142 would take the immediate pressure off the downside, though the market would still be locked within a more well-defined longer-term downtrend.